Big bank earnings kick off tomorrow. J.P. Morgan, Wells Fargo, Citigroup, and PNC all reporting before the bell. Let's bring in RBC's Head of U.S. Bank Equity Strategy, Gerard Cassidy. Gerard, is this rise in yields that we've been seeing more good for banks on the loan side or bad for banks because of what they got to pay out in interest?
John, thank you for having me on the program. And looking at it from the way you just asked that question, the long end of the curve is really not that impactful for the deposits. The deposits tend to be more the front end of the curve to the middle of the curve. And then at the long end of the curve, you do see it in the longer-term residential mortgage business, of course, and sometimes the commercial real estate business. But the biggest impact that the rise in rates has had is on the unrealized bond losses in everybody's fixed income portfolio.
So for the stocks that are first up in this round of earnings season, you got buys on J.P. Morgan, Citigroup, and PNC, but a hold on Wells Fargo. Let's start with the odd one out, Wells Fargo. Why the hold?
Good question. We still believe that the cease and desist order that they've been operating under, which has led to the balance sheet being frozen, is really putting a cap on this bank. Once that cease and desist order is lifted, however, this stock should do very well. It's been a stock that's traded, between the high 30s and mid to high 40s. They've done a very good job in bringing down expenses and driving up those consumer deposits. But because of that limit, they can't grow the balance sheet. That's the reason that we've got a hold on that stock.
Okay, Gerard, now between the other three, J.P. Morgan, Citigroup, and PNC, is any one of them more of a bellwether? I mean, J.P. Morgan, some might argue that it's in a class of its own. Will the results of any one of these give investors more of an indication of what to expect or look for the rest of the financials this season?
John, a really good question, because you're right. It is J.P. Morgan. They are the bellwether. But more importantly, when you look at their diversified business model, they're in all the different banking businesses. So if you want to do read-throughs tomorrow to wealth management, you can certainly do that with J.P. Morgan's results. Or the payments business, you can do that also with J.P. Morgan. Of course, consumer lending, consumer deposits. And then, of course, the big one of all is investment banking as well as corporate lending. So that's why it's so important to see their results tomorrow, because it will tell us what's likely to happen in all those different areas throughout the bank's reporting season, which, again, kicks off, as you said, tomorrow.
The KRE, the regional banking ETF, is still in detention, right? It's around $41. Is that going to change after we get some of these reports this season, or no?
I think what we need to see, John, I like that term detention, by the way. I would say that what we really need to see is the terminal rate for Fed funds. That's going to be the catalyst, John. And I think what you're going to see is when the market is convinced that Fed is finished raising short-term interest rates, in the last 4 tightening cycles, that has been the bell-ringing event. Now, maybe we're at it right now. We don't know. Maybe it's going to be in December. But if this inflation number can get under control and the market figures out that the Fed has finished raising short-term interest rates, that's going to be the real catalyst in our opinion.